Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's have a look at the stocks on the move today here in Europe. I'm Caroline Hepker with Tom McKenzie, and we're joined by Bloomberg's equities reporter Joe Easton. Morning, Joe. Let's start with the hospitality group Whitbread. Everything premier, but the share price, it seems.
Yes, full credit to Lenny Henry for that one, I think. So he gets a shout out. So Whitbread, so Whitbread shares, they're down 2.7% this morning. This after an update from the Premier in owner. Now, interestingly, it is the UK that's seeing the weak market. So UK sales down around 2% in the latest quarter. Some of their other regions actually doing pretty well. Germany had a big jump in their market revenue. So German sales up around 13%. But kind of the UK woes continuing. It has been weak before. We saw a drop down in some of their summer volumes last year. And it looks like that continues. But I think, given the weather at the moment, surely those UK staycations are going to be popular over the next month or so. So maybe they'll get a boost coming up.
32 degrees in London today.
Who needs Malaga?
No, exactly. It's just
me.
You can swap Malaga for Margate. It's perfect. Yeah, that works. Yeah,
Joe's heading to the beach.
Today.
Joe's heading to the beach this weekend. Clearly, the pubs will be busy as well, won't they? So a bit of a boost there to the wining and dining sector. But there is a bit of a theme because in terms of the UK and some challenges, recruiters, Hays, always a kind of really good gauge in terms of what's happening in the labour market. We know that on a macro level, the jobs market here, unfortunately, is starting to soften a bit. Is the slump in the stock price for Hays today linked to that, or is there something else going on?
Yes, I really enjoy actually getting these statements because they are, as you say, they're kind of a front runner of what's happening in the economy, because these companies like Hays, Page, they all see what's going on in the recruitment market possibly before you even get the ONS data. So Hays today is saying that they have seen another decline in their conditions. So tough conditions is what they're saying in the recruitment market. Analysts saying they expect to cut their earnings estimates by more than 20% for this year and next, given the declines in fees and also just not as many positions being advertised. So Hays stock absolutely slammed today. It was down around 15%. It's now down 13%. We're seeing Page Group dropping as well. That was down around 8%. And also this spreading into Europe. So Adecco was a big one, down 4%. And also Randstad. So all the big names, that one over in Amsterdam, all the big names taking notice of this, and really a rough day for recruitment stocks this morning.
Okay, so that from Hays. And lastly, European watchmakers are having a tough time. They seem to be suffering the same fate as other kind of luxury names too. I mean, watches were so hot for such a long time, weren't they?
Yeah, so it's a continued theme, as you say there. So Swiss watch exports falling by almost 10% in May. Now, that is led by a large drop in shipments to the US. That's potentially some indication of the trade war. But as you said there, Caroline, this has been a theme in terms of people kind of getting luxury fatigue and the aspirational buyers kind of moving away from purchases that they maybe would have done a year or two ago. So we're seeing Swatch declining. That's down around 2% today. Richemont also lower, and Watches of Switzerland, all of those stocks dropping this morning given this week data. So it's continued weakness and kind of, as I say, the aspirational luxury fatigue trade continuing, hitting watches this morning.
As you reach for your Rolex, Joe, can I just add this line as well, because the clock is ticking on our segment here. But the SNB, the Swiss National Bank, cutting interest rates to 0%. And Caroline was pointing out that the Swiss franc is up about 8% versus the US dollar. So that may be also a factor. They're cutting rates, maybe puts a little bit more softness on a currency that's really rallied as a safe haven and put pressure on those exporters. It just makes those Swiss luxury watches more expensive.
Tom, I'm just delighted that you're trying to make me look smart with the comment on
I'm also delighted about the clock ticking on the watch segment as well.
I got that joke too.
I just thought I'd give that little credit.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.